Good evening, all. Ira Epstein with your metal market wrap-up, and this wrap-up is for a pretty crazy trading day today, middle of the week Wednesday, and this is the 1st of June, 2022. Well, we started off the month down. Remember, a sell may go away. Well, we'll see if the stock market pays attention to that. We were slightly higher in the metal markets. I can't argue about the performance. Well off the day's lows across the board with nice gains. So you can't argue that in any manner. I was surprised at the strength in the dollar and the weakness today that we saw in a number of currencies. It's too soon for me to say that the market's prepping for the Fed meeting, which is on I think it's the 14th. So that's still 2 weeks away, roughly. I don't know what got into the market. I feel good that the beans and the corn continue down, as I said, but I'm thinking they're getting down to the point where they're going to see some support unfold. And obviously the bonds and the notes, well, they were the support behind the dollar index today, as were still higher prices. Look at how much you were up in natural gas, 55 cents, pretty crazy. All right. In the gold market for the week, we are down about 0.5%, down 0.43%. Market's yet to open. I'm doing this well before 5 o'clock, before the opening. If we look at the August gold chart, we've had one of these bounces. The question is, does the market have any momentum here? The current pattern is one of lower highs, lower lows. That's bearish. But the market is fighting to stay over, and it's doing it, the 18-day average and the 200-day average in gray. So you've got the markets converging here. I've pointed out how these numbers are going to come at each other, but a good update, what it does is it creates a KISS, K-I-S-S, where the 18-day average slides across the 200 and tries to glide back into a safe pattern back over it. Don't know if it's going to do it or not, but that's the way it's going. And you're staying away from Bollinger Bands temporarily. You're not at the top resistance or the bottom support. Market stopped doing that about 2 weeks ago, maybe a little longer, and it's just sort of drifting right here. Interesting trade. I wish I could tell you that I see a trend trade there, and I'm just not seeing it. In terms of momentum, well, you're flattening out. Market is not overbought. Takes readings over 70 to be overbought. You're just not there. So let's call it trend down, bias up at least on the close, barely, because it's just barely over that 18-day average of closes. And I would say if you start taking out today's lows, be careful. You could be then saying you're getting to 1810 and a half. What if you take out 1867.90? Well, because you made a lower and low first, you don't start an uptrend. You can negate the makings of a downtrend, but not the, verification by closing under the 18-day average. Interesting what happened here. Yesterday you made your run back in the August gold, July silver to the 18-day average of closes, testing it out. And again today, I like this action. The market turned back down. If it can break through these lows, that says silver is ready to move on against the gold market. That would be the ideal part on a closing basis. When you look at silver, is it not stuck at the 18-day average of closes? Just what we talked about. It's caught in the narrowing of Bollinger Bands that are going sideways. Even momentum has gone flat. This is the makings of a new trend. So markets that do this and spin like that, they're getting themselves ready to tell you, hey, something is going to brew here. Be ready. Let it do its thing for a little bit. In the copper market, as long as China's saying no more new cases, we're going to proceed with opening up Shanghai and Beijing in steps. I like that, and so does the market. You'll see this is also the play in the platinum. It's come alive, all right? And then palladium should be following suit, and it didn't much. It was actually down $4 without a trend. Reason I want this market to come alive is catalytic converters, right? They use palladium market. The platinum's used for the diesel, and it's really the palladium that's got the big play. Not saying that the cars are ready to pick up and run just yet. And look at how the Bollinger Bands are just narrowing in rather dramatically here. Dollar index, I hated this close today. The market's on the verge, unless it's down hard tomorrow, the way the math goes, you're going to lose the embedded reading, and that's going to put into play a challenge of the 103.11 area if this happens. It's got to drop and drop fairly soon by the morning. So we'll see if that occurs or not. When it reopens, I'll bet you anything that the embedded reading is lost on the opening. I don't worry about the opening. It's got to drift around for a little bit, and we'll see just what happens there. And, if you're like me, like you just heard, you're looking at the market, trying to come up with things to do, and I'm always questioning what I do. Do you? Don't you find yourself, should I do that trade? Shouldn't I do that trade? I second guess myself. You do too. But the difference is I'm probably a heck of a lot more disciplined than you are. I've got more experience than most people. I've been a registered broker since 1969. I've only done one thing my whole adult life. This. Just what you're looking at. Running brokerage firms, making trade recommendations, working with people. What I don't do anymore is the day-to-day, hey, I'm on the phone with this client or that. I do this from a bigger perspective where I'm able to sit back and I let my brokers do that for me. Yeah, I'll talk to the people, but I don't want to be their individual broker anymore. I cover all these markets in detail every day except Saturday. So Sunday night, I'm putting out my updates. Over the weekend, you're going to get a weekly look at the market. So weekly is very important. It gives you the bigger picture than the daily charts. Daily is a lot of noise that combine into one bar on a chart called the weekly chart. And it helps you. Example, as we've been rallying in the stock market, I have been adamant pointing out day after day to my traders, my subscribers in the morning, hey, you're still in a market that's trying to get back up to the 18-day average of closes. What did you hit? And this is what they were told today by me. All you did this week is you rallied to the Bollinger Band where the market should fail. It's the first major resistance point. It shouldn't get and pick up from there and just say, hey, I'm ready to run and look what's going to happen. And it didn't. It stopped there and it's backed off. That's what I've been looking for. So how do you get involved in this? Well, it's simple, folks. It's not much more than a cup of coffee. $7.95, you're going to get 26 videos a month, each averaging 20 minutes long, specific buy here, sell there. Here's what I'm seeing in the market. When I put out special updates, you get those. Other people have to pay for them. Why not take advantage? Go to our website, and you'll see the word research. Give it a click there. You can come right through here. If you got your cursor, move it up to the top and you will see there'll be an icon. Give it a click. It'll take you right in there. No, you're not buying it. You're looking to see what it's all about. Should you decide to buy it, great. One other thing I ask of you, click your subscribe button. The more subscribers we get, better we do on YouTube. Easier for me to stay here and do these for free. I'm Ira Epstein. You have a good day.